Uh, hey guys and gals, this is Blake Morrow, and uh, we got the daily Roundup webinar. We've got the press conference going on right now, and so I'm kind of half listening to the press conference. I know probably shouldn't be doing this daily Roundup as this is going on, just in case something is said. It's always really interesting to listen to and to hear what's going on. But I'm going to give you guys a quick update with what we're seeing here in the markets. Let's talk about the euro dollar. Euro dollar, really, really big move down today. We are finding a little bit of support around the around the 110 or excuse me, 108 50 level, which is near the 88% retracement. Also we had a little bit of horizontal support right here through here that's trying to offer the euro a little bit of support. But as the market is under pressure, the dollar demand is still very high. So you have to respect the fact that stocks are under pressure, dollar demand is still high. So any bounce that you see in the euro dollar is probably going to find sellers. The question is, how far can we bounce? And depending on, I look at this move as being very strong. So I think the bounces are going to be limited. Like earlier today, earlier this morning, I was thinking that, we're going to, get a bounce to 109.50. That I don't think is the case now because it's been such a strong move. I mean, we might only get 108 60s, 108 70s before we roll back over again. Excuse me. As long as stocks continue to stay under pressure, and that's what we're seeing today. We're seeing stocks continue to stay under pressure. I mean, this is, if you guys don't know, this is such a key level support for the stock market. And let me take you over to a weekly chart just to show you. This is the 38% retracement of the entire this is the financial crisis low to the high. You have to understand why we're sitting where we're sitting. So the dangerous thing with the stock market is if we start breaking through these levels of support that come in around the 2300, 2350 range. If I'm looking at just the market itself, this right here is basically a bearish wedge. Lower highs and consistent lows is a bearish wedge. So that means the propensity for us to break down versus breaking higher is probably at about a 65% chance lower, 35% chance higher. So for that reason alone, you've got to be really, really careful with the dollar, because if stocks stay heavy, the dollar is going to stay with upside pressure. And that's what we're seeing right now. You got the Aussie dollar, okay? The Aussie dollar that is breaking down through the GFC lows. This is the great financial crisis lows right here. We're all through these supports. That means that we're probably heading towards 55 cents, if not sub 50 cents. I tweeted just a little while ago, like, let's imagine that not just the world economy, but the US economy, we can just isolate it to that, which is, the largest economy in the world for now. Let's imagine we stop doing business for 30 days, maybe longer. What does that mean? Oh my God, here goes the euro. We just hit new lows just a moment ago. What does that mean for the markets? What does that mean for businesses? Some of you are going to throw out numbers like, oh, that means the S&P is going to 2000. That means it's going to 1500. I don't know. I don't have the answer, but I think those are the questions you have to ask yourself if you're like, wow, where is this market going? And I think you have to start thinking worst case scenario. Bottom line, right? You think, do you think that the market, the S&P is priced for that? I don't think it is. I really don't. I think the market is probably priced for a couple weeks, maybe at most. When we start pricing out 30, 45 days of the economy coming to a standstill, you know, how much contraction is that, and what does that mean for the equity markets? I think it could mean, you know, significantly lower than where we're at. Big support, as you guys know, on a weekly basis comes down around the 16 to 1700 level. And frankly, as much as I hate to say it, I think that's where we're going. I think we're going here. Not necessarily today, I think over time. So, you know, if S&P, you know, drops towards 16, 1700, depending on how long businesses stay shut and our economy, excuse me, stay shut, then, you know, that's all, and it's all very doable. Now you look at other currencies, like look at the US dollar Canadian. This dollar Canadian is just taking shorts to the woodshed. I mean, it's nonstop. And I don't know what's going to stop it. And if stocks continue to sell off, it's not stopping here. You know, we're going to trade up towards 148, 150. And it's just going to continue to rally. You look at the cable. The cable, as I told traders this morning, I think we're going to 115. I'm like, if we see 115 today, I'm willing to buy it. I think everybody thought I was joking when we were trading at 119. But now that we're here, no, I'm still pretty serious. So the cable, I mean, you know, it's looking like it's going to wash everyone out. All right. Dollar Mexican peso is finally starting to stall a little bit, which I think is a good sign for dollar. I guess if you're a dollar bear, it's probably a good sign because it's actually starting to slow down a bit. But still, you know, looks pretty bullish if you ask me. You know, who knows where it can, I mean, we can wake up tomorrow morning, it's up another 4%. Right? It's up 3% right now. Why can't we be trading at 24.50 tomorrow morning? Could be. Squeezing the heck out of everybody. I mean, even the dollar Swiss is going up, which is crazy in this environment. You know, Swiss franc isn't even offering any shelter for dollar bears or dollar bears. But you know, look, the dollar Swiss probably up here around the 98.50 level. It's probably going to be a good short. I might actually try to give that a whirl tomorrow if we get up there. All right, but guys, this has been an absolutely amazing bout of volatility. Okay, it's just an amazing bout of volatility that we're seeing. Please, you know, just continue to stay safe out there. Oops, look at the dollar index. We are at the 127% extension right now. Earlier this morning, the dollar index was right here, and the analysis is 5 hours ago. Oh, that shouldn't have been end of day. Said the dollar index is going after the 100 level, and on breakout could see 101.32 level today if the breakout occurs despite the overbought RSI. We're there. We're there. Can we go higher? Why not? Why can't we go up to 103.13? Why can't we revisit 103.50? Why can't we? Europe's cases are worse than China right now. Why can't the euro trade down to 106? Right? So, you know, those are just things to think about, guys. It's not. I'm not trying to give you a, you know, prediction of where the euro is going or where the dollar is going. I can ask the question, why shouldn't it? Why can't it? Right? Can you guys hear me? Test. Can you guys hear me okay? Oh yeah, okay. Dark Star said I'm the only one not hearing anything. Well, you know, you are the only one, and you can't hear me right now, so sorry to hear that. Or sorry you don't hear that. So dollar yen. One last thing I want to point out. Dollar yen. This is testing the 200-day moving average. I think there's a lot of people that don't believe the dollar yen can go up. So after doing a false breakout here and a false breakdown here, why can we not head back to 110 again? Again, this is all dollar demand, guys. Look at the dollar go. Look at the cable. Look at the pound just absolutely going into free fall right now. Yes, that's happening right now. My God. All right, guys. Good luck today. Remember, if you're not part of the ForexAnalytix community, make sure you come join us. So this way you got some people to talk to. Tomorrow we are offering a good price and a deal for ForexAnalytix. So if you're thinking about it, tomorrow's going to be a good day to wait for it. All right, have a great one, guys. Thanks for being here with me, and be safe out there.